Thank you everyone for joining today's webinar hosted by VIP Gloves Limited, ASX code VIP, the only ASX listed manufacturer of nitrile disposable gloves. VIP's facility, located in Malaysia, has been expanding significantly in recent years and with further expansion planned in the latter stages of this year. This expansion comes at a pivotal time for VIP, with the global nitrile market booming due to the rising awareness of the benefits of nitrile gloves in the healthcare sector. In fact, a recent study forecasts that the global nitrile market will reach US $57.1 billion in revenue by 2026. To talk you through how VIP has benefited from pre-COVID-19 expansion activities, the recent financial performance of the company and the upcoming expansion plans, I'm joined by VIP Non-Executive Chairman, Dr. Joe Wong, and Non-Executive Director, Mr. Sebastian Chang. Gentlemen, over to you.
Thank you very much, David, and welcome to today, my fellow shareholders, to today's webinar. As David mentioned, I am Joe Wong, Independent Non-Executive Chairman of VIP Gloves, and I will provide you with a brief synopsis of the company's business. My colleague and fellow board member Sebastian Chang, will join us later on, and he will provide you with an overview of VIP's key investment highlights for financial year 2022. With that, let's progress to corporate snapshot on slide 3, please. So, who are we? Well, VIP Glove produces medical examination gloves from our facility in Malaysia. Nitrile, also known as NBR, is a form of synthetic rubber and is usually very high resistance to substances such as chemicals, oils, and most importantly, dangerous pathogens. It is also a stronger, high quality glove making material that is compared to a natural rubber latex. And it tends to be the favorite type of material for making gloves that is dedicated to the healthcare industry, primarily because it lacks a natural proteins that at times causes allergies to wearers. Globally, as mentioned by David, the demand for general glove use is expected to reach approximately 57 billion gloves in the next 5 years. Per annum wise, VIP currently have a production capacity of approximately 768 million gloves per year. And this is across 6 production lines. Importantly, VIP is much on a growth trajectory. By 2023, we anticipate having an additional 10 production lines in operations. This will equate to almost tripling of our current capacity to approximately 2.7 billion pieces of gloves annually. Our facility is also located in an industrial estate that is about an hour from our nation's capital, Kuala Lumpur. Another point to mention is that we are also very much focused on distributing wealth back to our shareholders via a dividend policy, which offers a dividend payout ratio of between 20 and 40% of our earnings after significant items. As you know, for 2021 financial year, we have declared a total dividend of 0.23 cents per share. As you can see to the right of the slide, we are listed on the Australian Stock Exchange, and we have been trading range bound between 3.7 cents and 12 cents over the past 12 months. With a market cap of close to only 29 million and a PE ratio of only 6.2 times, we believe we are currently very undervalued. Slide 4, please. So before I discuss where VIP is now, and let me briefly tell you about our path to getting here. VIP is incorporated in March of 2016. It is also a result of a reverse takeover of the ASX listed company previously known as Voltage IP, which was an IT and investment company. A major milestone for VIP gloves was in August 2016 when we successfully completed and commissioned our first two lines, L1 and L2. This was followed by the completion of L3 and L4 in June of 2020, L5 and L6 in March of this year. That brought our current capacity to 768 million pieces of gloves per annum. The other attribute that has also contributed significantly to the company's success is our board of directors and senior management, as shown in the next slide. Our board and management have brought a wealth of experience to the company across a number of key industries. I myself have over 30 years in the pharmaceuticals and other businesses and have served on the board of several listed public companies in Australia and abroad. Our group MD, Jimmy Yang, has extensive experience in the operation and supply chain management, while Executive Director Kay Wen has been directly involved with the company since 2010. Our independent non-executive directors, Sebastian, David, and Peter, all have very significant experience across many fields, such as investment banking, corporate advisory, law, stockbroking, and also fund management in Asia, and most importantly, in Australia. We are moving on to the core business on the next slide. From our current facility, VIP Gloves operates 2 double former lines, L1 and L2, and 4 single former lines with a production capacity of 64 million pieces of gloves per month. Our nitrile gloves are sold on an OEM basis to wholesalers and distributors in Malaysia, which in turn exports their products all over Asia, Europe, and the Middle East. Our nitrile gloves, more importantly, have received the very, very prestigious European EU CE certification and the US FDA accreditation. And also recently, we have received the prestigious Australian TGA approval for our gloves. These approvals are fundamental in our aim to expanding our geographical reach to key markets in Europe, North America, and our home, Australia. I will now hand over to Sebastian, who will provide you an overview of VIP's investment highlights. Thank you, Sebastian.
Yeah, good afternoon, ladies and gentlemen. Thanks, Joe, for the introduction. I will spend a bit of time going through some of the fundamentals of the company. I will also be talking a little bit on the industrial numbers as well. So on these slides, if you can see from your screen, the 3 key highlights which we want to share with you today is the first one on the visible upcoming earnings, which we have established a very strong profit record in the recent financial year 2021, June year end, which as what Joe mentioned, we have made a very strong headway. And at the same time, we have also given out very generous dividend as well, total of 0.23 cents to a share. So that is the earnings potential. The second one is we're looking at the COVID-19 pandemic as the unfortunate opportunity, I would say, that resulting in a sudden surge in the demand and leading to a strong selling prices for us. So that actually added up to our strong performance last year. And we believe very strongly that this is going to be sustainable, as everyone in the world is going to go through a new normal in their lives, whereby the usage of masks, gloves, and other PPEs are going to be essential part of our day-to-day life. So we are quite fortunate that we are in this subsector which we can see very strong demand going forward. On the growth capacity leading to this surge in demand, we have also geared up our capacity. We have increased as we speak now, putting in new capacity this year, and next year there will be more aggressive capacity coming on stream as well. Okay. For the next few slides, I will talk a little bit on the financial performance. We mentioned that earlier. Revenue, you look at the left-hand side chart, there was a 250% increase in our revenue from the average of about 10 to 13 million dollars, Australian dollars per annum. We grew to 48 million dollars in the recent June 2021 financials. Similarly, on the right-hand side, our earnings in terms of EBITDA has also increased from $800,000 last year, the year before, to $10.3 million. So there was a very strong increase in the profitability. On the dividend side, the next slides, if you can see the the profit after tax and profit margin has gone from almost negligible in year 2020. Again, there was a very strong performance in 2021, where we recorded a profit after tax of $4.7 million. And that is after a charging of $7.5 million of share-based payment. Those were the accounting entry where we recognized as an expense for the share issuance. So if you add that back in, which is a one-off item, last year we actually made close to $12 million. So the dividend, as we mentioned, 0.23 cents, which translated to a dividend yield of about 5.6% on a whole year basis, based on the share price of 4.1 cents. So it's a 5.6% dividend yield, which we think that it is quite very proud that we show this figure, and that represented a total dividend payout of 37% of our profit. Yeah. On the balance sheet side, next slide, you can see that the four critical ratios, which fund managers, analysts like to look at it. On the debt equity ratio is 0.09, that means 9%. We only have, as we speak now, only about $2 million of loan, and that is the property loan for the piece of land that we are holding. I'll talk a little bit about the land later on. So that is the only loan that we have, $2 million. So that's why you can see a very, very low debt to equity ratio. The current ratio 1.7 times. Return on equity is about 32% because of the strong performance last year. And our NTA per share is about 2.5 cents. So versus our share price now is about 4 cents. So we are, in terms of a price to book, we are just, we are actually below 2 times on that. Okay. The next few slides, I like to share with you a little bit on the industrial scenario, looking at the global supply and demand scenario on gloves, and in particular, nitrile gloves, which we are in. Okay, this 10-year chart, about 5 years are historical and 5 years are projected. These are taken from Frost & Sullivan's report, where it shows the total disposable gloves from 2016 to 2020 grew by average of 12.6% based on CAGR, 12.6% over the last 5 years. And moving forward from 2020 to 2025, we are projecting, or Frost & Sullivan rather, is projecting a growth of about 13%, 13% per annum over the next 5 years. on the volume sales. Now, why is it is not surprised that if you look at the track record, it has always been growing because of the habits, because of more and more people are concerned about health issue with or without COVID. I mean, you can see 2001, 617 has been also growing very strongly. So we believe that in addition to this pandemic, people are getting more and more conscious about health issues. The usage of glove is going to, in fact, go up even more. Okay, I'd like to also, share with you a little bit, which is not on these slides, it's on the world. There are certain countries, the per capita consumption, like in the US and in Europe, average is about 100 to 150 pieces per person per annum of usage of disposable gloves. Whereas in Asia, the average is only about 20 to 25 pieces. So you can see that there is a tremendous growth or demand for this product. And in China and in India, I always like to bring this up, say that the average consumption per capita is only about 5 pieces, 6 pieces per annum per person. So you just need these two big countries, which is about one-third of world population. You just need the population to increase the usage of 1 pair per month per person. And you will be looking at additional about 70 billion pieces of glove per year. So that is additional about 10% of the world supply demand. So as we say that, we are very bullish that the growth is tremendous in terms of the usage. Yeah. The next slide is, you can see it's quite similar also on the growth trend. Okay, this, we are talking about the disposable glove market in terms of value, in terms of billion US dollars. Of course, it's peaked this year. It is going to peak this year because of the combination of both stronger selling prices as well as higher consumption. So it's going to peak at about 38 billion US dollars for this year alone. For the next few years, the value, in terms of value term, is going to come off a little bit because of anticipation of a lower selling prices. But even having said that, the selling prices is still going to be higher than the pre-pandemic era, like for example in the 2017-18 era. And I think gone are the days that we will be selling at a very low prices. And now, even though after, I mean, God willing that the pandemic is going to go away soon, even after that, we are anticipating that the selling prices is still going to be continue to be strong. May not be as strong as what we experienced in 2020, 2021, but certainly it's going to be still going to be commendable on the growth. Okay. Okay, one more slide. The next slide is on the demand and supply. Again, Frost and Sullivan did a very extensive study to show that the ASP, average selling price, ASP, for 2020, obviously we know that because of higher demand and suddenly the capacity couldn't cope with the sudden surge. So that has actually helped to push up the prices, I mean selling prices for us as well. But again, reinforce what I just said, even though after COVID, we are still continuing to see strong prices going forward. And the worst shortage, according to the Malaysian Rubber Glove Association, is still currently about 80 billion pieces. So there is still a vacuum on the supply and demand scenario. So with that, we think that there will be quite a bullish trend on the ASP going forward. Okay, the next few slides, I would like to share with you what VIP Gloves, our company, is doing. with all this, bullish numbers coming up, what have we done and what we plan to do. This table shows us our capacity. Line 1, line 2 is what we had since 2016. And line 3, 4, 5, 6, the 4 additional lines came into the picture in 2020 and early 2021. We added 4 more lines. So currently our total capacity is 768 million, close to just a pinch below 800 million pieces per annum. We have 2 more lines should be coming on stream end of this year, November, December. That would add additional about 160 million pieces. That will bring us to end of the year to about 930 million pieces. That is equivalent to about 22% increase from today's capacity. So that is what we have for this plant. Now, I mentioned earlier we have a piece of land next door, which we still have a loan of $2 million, the miserable $2 million loan. We are planning to build a complete new factory, which will house 8 double former lines. It's a double-decker lines, double capacity lines. Coming on stream 2013, progressively 2013 to meet 2013. Sorry, 2023, not 2013, 2023, 2024 in about 2 years' time. That will bring additional about 80% more capacity to us. So by the time by 2023, mid-2023, we will have a total capacity of about 2.7 billion pieces per annum. So that is, we will be, by then we will be able to really be one of the more significant players in the market, especially in the Malaysian scenario, 2.7 billion pieces. Currently, the production, I'll show you some picture later. We are already started doing the groundworks, just awaiting the local government's approval. Once we get a green light, the construction will start, and then the installation will come of the lines will come in eventually. Okay. The next slide will show you our capacity and our utilization. The line chart represents the capacity utilization. You can see that we have always been doing about 95% and above, which technically is considered full capacity, 95, 98, and this is, we are talking about 24/7 running it. On the rightmost point, the bar chart, it dropped to 75%. That was because the Malaysian government's ruling of there was the time where we had a massive lockdown, where we were only allowed to run at about 60% of our human resource capacity. Even that with 60% of human resources capacity, we managed to squeeze up 75% of our production capacity. Okay, so we are expecting that the more relaxed on the ruling, by towards the November next month or December, we should be able to go back up to the previous level. Okay, once the lockdown become more relaxed. Okay, show you some pictures on our line 7 and line 8. The next slides. This is line 7. Actually, this picture was taken about a month plus ago. So if you go back to the factory now, you probably can see that it is much more advanced now. It's almost completed. This is line 7, and we plan to commission it by November. That is, a few weeks from now. And for line 8, the next slides, you will see that it is about a month. Again, this picture was taken quite a month or 2 months ago. So we are actually estimating to complete and commission by December 2021. So that will give us, the complete 8 lines for this current factory site. Okay. Now for the next door factory, factory 2, yeah. Okay, if you can see from the Google map, the existing VIP factory, that is where we are now, and on the left to the building, I mean to the left from the from where we can see from the map, is a new 3.4 acres land. It's an identical size, about 3.4 acres of land, which is where we're planning to build a new factory there. See, once we get the approval from the local council, we can start the earthwork and the erection of the factory building, because we are not going to put in any sophisticated building. It's basically just a normal factory building. So that will take us only about 6 to 8 months for completion. So that will bring us to say sometime early next year. Then the lines will come in. We are going to put in 8 lines progressively, every 2 lines coming in. So as and when the new lines comes in operational, we will start running it. So the whole 8 lines, we don't have to wait until the completion of the whole 8 lines before we can turn the engine on. We will do it on progressively as and when the lines come in. Yeah. Total capex for this venture is about $30 million. So far, I think we have worked on a very tight a budget, and then we think that we can achieve it within the $30 million. It will be a combination from our cash flow generation as well as a little bit of borrowings. As I said, our balance sheet is pretty clean now. Actually, a lot of bankers are actually knocking at our doors. So we will probably take a little bit of loans to bridge this construction of the new factory. Okay. Okay, the next slides. Yeah, this is the front profile. So that's why I say, the factory, we are actually technically on the right-hand side of the factory. If you can see a slight picture on our existing factory. So it's just adjacent to it. So there we can do a lot of savings because of shared resources. We don't need to build any additional office space because our existing office space is sufficient. Storage space, yes, we will need additional storage space, at the back of the new factory. So we are going to do it, on a very careful, and we don't need to overspend unnecessarily for this factory. Okay. So in conclusion, I like to reiterate that what are the key takeaways that we are presenting to you now. Number one is on the financial improvements. We have shown a very strong performance in 2021, and we believe, given the sustainable ASP, increase in our capacity, we should be able to continue to do well. The positive outlook on the world demand will give us the opportunity to continue selling our products. Joe mentioned earlier on, we already obtained our FDA to US, our CE to the European market, as well as TGA to Australia. So this will be the new frontier, new markets that we'll be looking at. We will be also later on introducing our own brand name to push our products into these new markets, which we believe should give us a better profit margin. And again, on the capacity, 3 years ago, 2019, we were merely running on 2 lines with a capacity of about 400 million pieces. And in about 3 years' time, when the new factory 2 comes on stream, we will have a total capacity of 2.7 billion pieces. That is almost 7-fold of what we had 5 years, 4 years ago. So within a span of 5 years, we will be expanding our capacity to be more significant player in Malaysia and in the world market as well. So that, ladies and gentlemen, is my brief introduction on the companies. David, I turn it back to you.
Thank you, Sebastian and Joe, for a very insightful presentation. I should have reminded people that if they'd like to ask a question, they can do so by submitting a question in writing using the Q&A button at the bottom of the screen, which a number of people have taken advantage of and submitted a number of questions. I'll go through them in order, if that's okay. One of the big questions is, those who are looking at the business new now would think that you increased production as a result of COVID, but it's probably truer to say that that expansion was occurring well before COVID, the COVID pandemic hit, and it was just that the two coincided at the right time, so to speak. So the expansion plans, how did they come about, and how long ago were you thinking about expanding both the existing facility and then into the second facility?
Okay, the current factory one that we have, as I mentioned, we only have 2 lines, but the capacity, the space available was for 8 lines, which is now we are filling up. So it has always been pre-planned earlier on. Like what David said, it's just a coincidence that because of the COVID, we speed up the expansion program. It is not like, it's reacting to it, no. Okay, and on the factory 2, again, the piece of land was purchased 2018, I believe, which was way before, all these pandemics. So everything is already pre-planned.
And in terms of, I assume as a result of the COVID pandemic, a whole lot of new players came into the market. Obviously not as established as yourself and others in Malaysia. What's the competitive advantage that VIP Gloves has over those new entrants?
Joe,
VIP started as a glove line manufacturers. If you look at some of the big glove producers today, Supermax, Top Glove, we started life actually manufacturing their lines. We actually have the technology, we have the know-how, many years of experience in making lines, glove lines for other manufacturers. So one of the biggest advantage that we have would be the know-how. And as you can, if you speak to some of our customers, they are always saying that we make very good gloves. We make our quality of gloves, excellent. And we are also always on the lookout for better. We are always looking at better technology, simply because we have the people, we have the know-how. So I guess that is our key to our success.
And we mentioned that some of the other major players out there. Do you think there'll be M&A in the space? Do you think some of the majors will try and pick off some of the smaller groups such as yourself, or there may be opportunities for VIP to look at acquisitions of other private groups in the space and add its economies and its skill sets to those groups?
I think we're always talking to people. We're always looking for better opportunities for our shareholders. We're always looking at increasing our shareholders' value. So I think, the board is always evaluating proposals, and if the board finds a proposal that is that's beneficial to our shareholders, I think we are always open to moving forward with that.
Yeah. If I may add, Joe is absolutely correct that we do not close our doors. We listen to whoever who has any proposal, but I think the important thing is that with or without, we will continue to take care of what we have now and do our own expansion, what we have planned for. I think that is where we want to ensure that the shareholders' values will be preserved at any time.
In terms of, you mentioned producing your own branded gloves. What's the appeal there, and what do you think that will do from both a branding perspective, but also a financial perspective?
Okay, first of all, if we were to have our own brand, obviously, you cut out the distributor, the middle guy who is going to pick up some of the margin from you. So we can go directly to the end buyer overseas. Because, I mean, again, it is not something that we have just thought about it yesterday. It's already pre-planned. But we could not do that earlier because, number one, we did not have sufficient capacity. And number two, we did not have all the accreditations, especially, you mentioned the FDA, the CE, and the TGA. Now that we have all this, then basically the whole world is our market. That is where we can actually launch our own brand in a more meaningful way.
Yes, we also have to take into consideration things like product liability insurance. If we have our own, brand, we are actually talking to distributors who are willing to work with us to distribute VIP's own in-house brands. So yeah, things are progressing. So once we sign an agreement that is that we will let our shareholders know. I think this is something that we have always been wanting to do, have our own brand on our own gloves.
Well, it's obviously been very, very busy, and I assume pretty much anything that you're producing is being sold. What's the visibility for the next year and ahead? What do you see demand for your gloves like in the global marketplace over the next 12 to 18 months?
I think having our own brand would give us a better margin. So, but the outlook for the glove industry is it's finding a niche. It's finding a point where supply will meet demand. But again, like Sebastian said, over the next 5 years, we'll continue to see demand increasing, not only for the healthcare sectors, but for things like the things like restaurants, food and beverage industry, the health and safety industry, especially like law enforcement. They are slowly looking at using gloves more. But I think overall we'll probably see better margins. But for now, there is volatility, extreme volatilities, but that I think all glove manufacturers are facing. So.
Yeah, I think what we have achieved, even though you look at our 2021 numbers, we have not, at that point in time, we just managed to get our FDA and CE. So from this year onwards, I think we will be able to add new markets into our portfolio. So,
yeah.
With the new capacity coming in, I think it just blend in just nice. The timing is just nice that we have this new capacity coming in, and we have a new markets that we can absorb our products.
It's just a question or some comments here regarding share placements and bonus issues to directors. It's more a comment than a question that if the company is looking to raise capital in the future, existing shareholders would love the opportunity to participate. But also, is there plans, and what's the thinking behind the bonus issues to directors and key employees? I assume that's clearly driven by performance, which the company has been able to achieve over the last 12 to 18 months.
Yeah, the share performance, I think the question was, a bonus. It was actually not a free bonus share, just to give up, on an empty blanket. But it was based on a certain performance milestone. Half of them have the management has achieved it, so they got it half, and the other half has still not achieved yet. So there's no free lunch, even though to our own staff, our own directors. There must be a certain milestone to be met before they can be awarded that. And on top of that, the amount of shares that were issued is the total is is less than 10%. It's about of the total capital, so it's not really a big dents to the earnings per share.
And it really helped incentivize our management and our key employees to actually work hard for our shareholders. So
I've got a question here that's more probably related to sort of how the contractual relationship with buyers works. So when you've got buyers buying product, how do the contracts work? Is it simply a purchase order with payment terms, and they just are repeat customers once they come through the door?
Yeah, I think sorry.
No, go ahead, Joe. Go ahead.
Yeah. For now, right? I think we go on a quarterly basis, 3 monthly type contracts, where payment will be not upfront, but 30 to 50% upfront, and 100% on delivery. So we that is basically what other glove manufacturers the terms and conditions. That it's basically very, very much a industry standard.
Yeah. So that's why you see our our receivables is almost zero. I mean, whatever you can see is actually maybe the time difference between the year-end cutoff date. And obviously, because it's 100% payment before we ship out, the occurrence of bad debt is actually none. Not that I know of any over the last many years. Yeah.
And are you seeing, obviously, the price of the finished product is increasing, but are you seeing pressure on inputs coming in as well? And as the expansion occurs, is that generating the economies of scale that you're looking for?
That economies of scale definitely is a given. When we increase from 2 lines to about 4 to 6 lines, we can really see the tremendous savings in our expenses. Then I think we already achieved very comfortable economies of scale at this point in time. Again, as we move into higher capacity or higher rolling out more products, our unit cost of production definitely will kick in. It will be even cheaper for us to produce.
And you touched on during your presentation that due to restrictions imposed by the government, the production had to reduce marginally. Have you seen that bounce back, or is that close to bouncing back in future quarters?
Yeah.
Sorry.
I think our management felt that the capacity should go back to the employees will be allowed, 100% of the employees will be allowed to go back to the plant by November. So we are expecting 100% capacity, production capacity by then. Sebastian?
Yeah. I mean, basically that is what, it didn't actually occur only to us. It's actually the whole industry, or for that matter, the whole country, whether you're in gloves or you're a car manufacturer, for example. I mean, just for the benefit of some of our Australian friends here, a lot of industries were affected by the government restrictions then. So, unfortunately, we have to live with it for a while.
And sort of from a looking forward point of view, what are your customers telling you about their demands for your product going forward?
As I said, a few times, now we have more customers, new customers, which we could not deliver our products to because of the accreditation. So now we are establishing new or existing customer who are able to take our products to Europe, to North America, or to Australia for the matter. So, it's exciting for us. So we are not really too worried about that. If before before we had this accreditation, we were still doing comfortably well, that we were able to sell to the Middle East, to sell to other parts of Asia. And now we have a new market. So obviously, there's more room for us to grow.
How much work do you put into safety and labour practices within the facility to make sure you're delivering your product in a way that is going to, not just from a regulatory point of view, but from a buyer point of view, is going to meet those demands?
The FDA applications to the North American, to the US market, I mean, some of you are in this line, you will know that it is very stringent in terms of the, to demonstrate to them that, you have no child labor, you have to observe safeties and all these things. And we have always been conforming to all these strict regulations. And I think it's also, from the humanity point of view that, we want to ensure that our fellow workers, whether they are, our local executives or a foreign labor, they come to this country to work. I think we have to treat them with dignity and, do all the proper things. And we certainly have no child labor and, all this stuff that's going on, definitely not.
And we are also we promote the safety, a lot of safety measures in our plant. And we are also very much, try to use more machines, mechanize the operations rather than using a very heavy utilization of labor. So, we are moving towards more automation. So that would actually, allow us to better reward our existing employees and laborers, and with better remuneration. So child labor is never practiced and we've always been taking care of our laborers, our workers, no matter which level you are at. You'll always be well taken care of.
I think the other thing is also because we are small, relatively smaller establishment, we only have about 100 over staff, workers. So it's very easy for us to control. If I have maybe 20 factories, spread all over the country, it could be, you will probably have to be a little bit more careful with that. In our case, it's, we provide housing for our workers, and it's quite easy to control at this point in time.
A bit of a leading question. I'll let Joe answer this first and then Sebastian. Given the hard work that the company and the board has put in over the last 2 to 3 years, the expansion that was planned and put in before COVID, but also now seeing the benefits of that expansion due to COVID pandemic initially and then what the new normal will be. Joe, how excited are you for the future of VIP Gloves? I
will speak on behalf of my other colleagues or some of my shareholders. There are actually new frontiers that Sebastian has talked about. With the new certification, the new accreditation, I think we will probably be seeing very exciting growth. We are actually very excited about having our own brands. Actually, rather than making gloves for other people, rather than making machines for other people, we are concentrating on making better machines for ourselves, manufacturing better gloves under our own brand name. So that is actually the next chapter that we are very excited about. And also, like we spoke about M&As in the past, we are also very aggressively looking into making other types of gloves, things like surgical gloves, clean room gloves. Those will give better margins for VIP. So we are always looking into things like how to improve what we are today. So, Sebastian?
Yeah, I think I have nothing else to add, but just to say that I'm excited with the company. I'm here to stay.
On that note, I'd like to thank you both for a very insightful presentation and an education on the nitrile glove market globally and how VIP gloves has and continues to play a leading role globally in that market. For all those who are watching, thank you for your time and for your very interesting questions. If anyone wishes to make contact with the company, please do so using the email details sent to you as part of your Zoom registration. Thank you, everybody. Stay safe. And if you're using anything in a healthcare sense, make sure you use VIP nitrile gloves. Thanks, everybody.
Thank you very much.
Thank you so much, very much, everyone. Thank you.